Good afternoon, everyone. Welcome to basically our webinar on Harp charts, of course, as always, on this 4 o'clock Central European time. Thanks for joining. Before we dive into today's topic, which is actually using the Harp charts for scalping, please be aware of this disclaimer and the fact that trading for exchange and global financial markets is considered high risk, may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer and you are aware of the risk involved when trading. All right, maybe, of course, you know us from Admiral Markets, and then I give analysis and webinars at admiralmarkets.com. Please check us out. We also offer free credit to our website and courses if you join Admiral Markets through us as a reward for, as a thank you for that. So take a look at that. Also, not only would you get free courses like a FIB course and trend course, if you join Admiral Markets, but you're also, don't forget, joining in an award-winning broker, winner of the MT4 Best Broker Award in UK 2015. All right, in today's webinar, we're basically using the trend. We're using Heikin-Ashi candles for trend definition and our special momentum indicator. For filters, we're watching basically pivot points and support and resistance levels. For momentum, we have special developed candles that indicate momentum and pullback. Momentum would be basically when the candles are blue for up and red for down. And we have arrows to show when momentum continues within that blue or red part. Then we basically have our setups that are based on candle color changes, the arrows, or the change of the oscillator from loss of momentum basically to regaining momentum. All right, so those are just a couple of ideas where you can use our charts for trading. All right, with that said, let's take a look at the current markets. Of course, we have the euro dollar in view. Let's start with that. And you can see that trading this euro dollar on a 5-minute chart is definitely doable using our Harp charts. It's basically very universal. The Harp charts are intended to be used on all time frames. And in fact, it's easily doable from basically a monthly down to a 5-minute chart. Now, we've not traded on the monthly, the 1-minute chart, so that's something that I'm not sure, but the 5-minute chart I've got good results with. So basically, if we look at this 5-minute chart, just looking at it, you can see that everything is quite aligned. First of all, we see that this is actually an oscillator that shows momentum. We see various parts of momentum and various parts to the upside and various parts that shows retracements. More importantly, though, the long-term trend is up. When looking at this, you can clearly see that. That's definitely up. Also, our moving average indicator is clearly showing upside, as you can see here. The basically the 8 EMA versus the 144 is up, and also the 21 is moving away from the 34. So both, moving average sets of moving averages are to the upside. So you can see that the moving averages are up. Our long-term our long-term oscillator is up. So that's two things. And then, of course, this momentum indicator is showing the potential for retracement and continuation. Also, our Harp candles are blue, which is showing momentum. So if you look at a day-to-day like today, which is actually a bit of a slow day considering the news events that are coming up later this week. But if you just look at that, you have plenty of opportunity to potentially trade it. Of course, the best opportunity was to bounce off the pivot point. I am not a big fan of trading it to the upside right in front of the pivot point. Now, those trades would have worked out. Signals like that, the blue candle here, an arrow here, a blue candle here, all of those would have worked out fine with the stop loss below basically the M2, and those would have been profitable trades. But I think the best one really was this arrow and this candle, of course, right there, and you can see that there was a good bounce to the R1, all right, with a pause at the M3. Now you might be wondering, okay, but this is a 5-minute chart. Was there a trend on a higher time frame? All right, and it depends what time frame we use for a trend. What we do have basically when we look at the hourly chart, when we look for trends, is basically green candles and blue momentum. So did we have that? Yes, we did. We had that from here, all right. So when we dive into the 5-minute chart, you see that we clearly had an uptrend on the hourly chart. And that's what you need when you're trading lower time frames. You need a trend on an hourly chart for 5-minute trades. You don't need a 4-hour trend necessarily. We need a 4-hour trend when we're trading the hourly chart or when we're trading maybe the 30-minute chart. We don't really have to focus that much on the 4-hour world if we're trading the 5-minute chart. So back to the hourly chart. Yes, we had a trend at that point, as you can see from this moment onwards when we have the blue. This is aligned. This is aligned. In fact, the most important is this oscillator for trend, but the Heikin Ashi candles alignment is a good extra that gives even more, let's say, credit to up or down. And we had that on the hourly on the euro dollar. Just like we had it on the downside as well as yesterday. I was talking about the downside yesterday from here, explaining how we had good shorts on the euro dollar using Harp charts as well. Now the same is valid, but then for upside. In my Admiral Markets webinar, I was already warning, for a downside down to 112.50, which could be a bouncing spot back to this resistance, basically like a heartbeat, and we're getting that. And I think that the 5-minute chart did offer a good opportunity considering the good 1-hour trend. Now, if you're using the oscillator, so you got the entry here with a blue candle or a blue arrow, right? But the oscillator could be used in this case too. The oscillator, for instance, showing here from thick red to thin red, that could have been an early setup on that particular bar right there. All right. Now the oscillator did turn here as well, by the way. All right. So from that point of view, that could have been even a setup a bit higher, and in that case, we would have had to live through this drawdown before getting to the upside. Now the drawdown was not particularly strong. Let's see, the first candle that changed was this one. So it was only 20 pips. So that is not particularly big. I think in this case, the best stop loss would have been this bottom for about a 30 pip. Typically, you want to go around 30, 30-ish, 35-ish. It depends on the pair too. Obviously, pound yen could be bigger than that. And this is a nice fractal to use for such a stop loss. We would have had a bit of a drawdown dip, but ultimately price would have gone our way, and these entries would have even been better. So that's just an example how you can use our candles, our Harp candles, really, to trade, even on this 5-minute chart, right? Let's take a look at maybe a different example. Does anyone have a preference for a particular currency pair in mind right now? Let me know. We can take a look at that. But this is a simple example of an intraday trade, and just quite straightforward, using these tools to our advantage. All right. This is a particular moment where trading intraday makes a lot more sense than swing trading. With news events around the corner, swing trading is not as good because you don't want to get trapped in basically a correction, a sideways zone, or even worse, which would be a very big market reaction to that news event that's upcoming. So, that swing trades are great, but you have to have some time to develop a trade. So if you're looking at hourly or 4-hour for swing trades, then news events like that are not really that good for such a trade environment. If you're trading on a daily or weekly, then typically depends on which news events, but smaller news events are not important in that case. Only big ones like interest rate days or NFP, that's something you might want to still be cautious of. All right, let's take a look at maybe the Aussie then in that case. All right, you can see we got, I don't want to use necessarily the 4-hour chart for our lower time frames, but we do have everything aligned, right? You got green candles, dark blue here, blue long term, up on the moving averages. More importantly, though, hourly is also certainly everything is aligned. Actually, it has been mostly aligned already since roughly here, right? Beautiful uptrend here and here and here and here. So that's clear sailing. We got green light for uptrend. Most important, though, is the light green, Heikin Ashi candles, and dark blue. Always remember that. So if we then zoom into the 50-minute chart, you see today we started off above the pivot point already with dark blue candles. So that was a great way to trade. Now, if we're looking for ways to trade it on the 50-minute chart, not the 5, we'll look at both time frames today. then the opportunities were basically, let me show you when the trend changed, okay? Right there. So we had immediate opportunity when the trend changed right here. It was below the pivot, so that's not the best, but the pivot was challenged already. So when a resistance line gets challenged, gets re-challenged basically the second time, I sometimes do take a long in that case. We had a blue candle and blue arrow. Now after that, okay, let's say we ignore this one then, and let's say after, what is the next opportunity after that? Well, that's actually this oscillator turn right here, all right, the one candle after that. But that's still right at the pivot. So if you don't like that one, the next opportunity could be a break of this fractal. If you don't like break of fractals, these are all opportunities, but each person has a different psychology. That's why we like to mix things up. So because everyone has their own preference of trading, and we want to basically offer multiple ways of tackling the markets so that everyone with a different type of mentality can find a way to nudge in a trade into the direction that we're looking for based off of an hourly or 4-hour, based off our trend chart. All right. The next opportunity for upside was basically this oscillator change from thin to thick again. That was here. All right. The next opportunity after that on the 15 was either here or the blue arrow here. All right. Both of them were okay. I mean, they're pretty close to the R1, especially this one. I think I would therefore skip this one. I would filter out that one. But I think this one is okay because here we already challenged the R1. So, this is the second attempt. That is always better than first attempts. So here are just a couple of examples. Now, we didn't have any candle setups since here. Why? Because basically we've kept the momentum. The candles stay blue. We haven't gone into gray or red like we did here or here because the momentum has kept its pace. It's kept its bullishness. Didn't lose, therefore, its dark blue color. So we didn't have a retracement. We didn't have a pullback continuation. So, from a candle point of view, we only had a setup here. But that's why we do offer various ways of looking at the chart so that this is not only, the only way of perhaps tackling intraday the Aussie. 5-minute chart, for instance, here, you can see that we had arrows here, we had an arrow here, and an arrow here. And all of those are interesting setups. Why? Because here we're basically bouncing off the pivot. Here the second one, this is the first one, right? The second one, we basically already tested this resistance. This is the second attempt. 1, 2. And with the third one, we also already tested the resistance, and this is the second attempt. So those are all good 5-minute setups, I think, within the Aussie upside. We're above the pivot, mind you. So these are all good arrows, all good potentials. And if you look at the oscillator, they're more or less at the same spot, as you can see. So in some cases, they're just confluence. But the oscillator had one extra, which was here. Now these particular ones where it becomes thin and thick are not that interesting right here. Why? Because basically it's only one bar that's thin. It's a very, very shallow retracement. Secondly, those retracements are happening at an M3 and very close to an R1. All right, so those two particular ones are not interesting. What I do find interesting is these, this, and this, but not so much this and this. All right, so that's basically how you can see which opportunities are more interesting from an intraday perspective once again. And just to show you again, look at these moving averages aligned, look at the long-term moving average. So when you have those two aligned, then this momentum on the lower time frame is basically an entry tool. It's basically used as a pullback continuation tool. All right. That same indicator, all right, the same momentum indicator here with the red arrow, on the hourly chart, when it's used for trend, is actually used differently. In this case, it's used for trend, just like this. Here you can see that everything is aligned up, up, up. On the 5-minute chart, we don't need necessarily these to be all bullish, right? Because that would be, we wouldn't have an entry. What we're looking for when we have an 1 hour uptrend is actually we're looking for pullbacks and continuations. And this shows that so nicely. And the arrows show that. And the candle colors show that. All right. So, from that point of view, we had a great intraday trading to the upside. And well, I think these provide good examples. So if you have any questions, just feel free to let me know. We will have, by the way, just as a message in between, we'll have a webinar as I wait maybe for some questions. We can take a look at some other pairs if you want. Let me know which ones you would like to take a look at. Maybe, for instance, we'll take a look at a pair that had less intraday smoothness, for instance. Maybe that plays a role. If you're looking for more webinars, by the way, tomorrow, Thursday, we're taking a look at 4 p.m. GMT time at Fibonacci Advanced Part 1 and 2. So I hope to see you at animalmarkets.com. Click on Education and Webinars. All right. So maybe we can take a look at the dollar yen, for instance. You can see the dollar yen didn't have a trend, right? Let's take a look here. You see, these are great candles. So, in that case, we could look at the 5-minute chart, but it's not going to be a great intraday environment. And if you look at the 5-minute chart, you see that price was basically fighting against the pivot, right? It was a mixture, a slight long-term uptrend, but this is down. This is slightly up. There's no alignment here. So you can see that when these things happen, it's this is not the best pair to trade on the 5-minute chart compared to what we saw in the Aussie and Euro at this point. So, when you look at and analyze the market and you see the dollar yen and you compare it to the Aussie, you might think, the Aussie just looks better at this point. And I will keep an eye on the Aussie, and I just might skip the dollar yen for intraday trading. All right, so those things, you can derive from looking at a trend, and that's going to, of course, our dashboard is going to help with that, with identifying which trends are available, and we can focus on those. Normal time to stay in an intraday trade is a good question. Basically, if you're trading on a 5-minute chart, it could be from an hour to 3 hours. But you don't want to stay, more than, on a 50-minute chart, definitely not more than a day. So on a 5-minute chart, you don't want to do that more than maybe a session, right? Like if you enter in London Open, you don't want to stay in after London close. That's the max, let's say, for 5-minute. But unless you want to translate the 5-minute trade into a swing trade, it's tricky. It's possible though, but otherwise you don't want to do that. If on average though, that would be the max. On average, you would probably be looking at a bit lower amount, of course, depending on how fast the momentum goes. Let's take a look at the Aussie here. For instance, if we entered here at 11:15 at the pivot and we exit at the R1, we're looking at 70-ish 5-minute candles, which basically is 6 hours, right? Five and a half. If we would exit to the M3, it would be only 2 hours. Just to give you an idea. All right, so that's the first part that I want to tell you regarding the Harp intraday trading. All right, let's take a quick break here for just a minute, 1 minute, 30 seconds, and I'll be back and we can continue with the next pairs.